Welcome to this week's edition of Todd Talks. We're going to do a dive into the second half forecast for 2024. We always do a mid-year forecast. Let's get right into it. So first up, sales have lingered at 30-year lows. So sales have been really slow. And if you can see, these are the sales forecast. Average was 4.9 million units per year. But we're actually going to probably close out the year of 4.1 or 4 million. And that is like a baseline demand. So what we've achieved right now is equilibrium, meaning the housing market is stable. Prices aren't going to fall. They have nowhere to go but up as demand increases. So we're actually going to be underneath what the forecasts were. And so we're at a point where we have rising inventory and lower demand. And that should create opportunity. So you can see the price forecast here. The average is about 2.8. Now, interestingly enough, in Texas, I've been saying this all year long, that I'm predicting 4, and we're currently at 6. And so what's happening is that the year-over-year prices are higher, but the ability to negotiate is getting better. So let's keep going through this forecast. So one thing is they're going to pretty clear is that home prices are going to continue to go up, and the reason is we don't have enough housing inventory. And this is a theme I've been talking about on these videos and with individual clients. So this is what a chart. This one shows what a buyer and seller in neutral market means, and this is going back to 1999 through the present. So it goes quite a ways back. And what happens is if the supply of homes is less than 6 months, it's considered a seller's market, and if it goes over, it's considered a buyer market. And if you look. Target inventory problem, we haven't had really a buyer's market except for when? The housing collapse right here. And that flooded inventory on the market due to foreclosures, due to 100% financing, stated income loans, no income or asset verification, 2-year interest-only payments, and then people couldn't make the payment, and we had literally a flood of foreclosures. But look what's happened since then. We have a systemic housing shortage in the United States. And that is why, if you're watching this video, whether you're one of my clients or not, housing is the very best investment you can make right now, long term. It is the very best investment. So let's keep pushing forward here with the forecast. Mortgage rate projections. So the projections was 6.83 for Q3. That's sort of an easy one because they're already there. And you can see they think they're going to slowly trend down. We'll see. I can tell you this, if the labor market starts to break, meaning we have a little bit higher unemployment, the Federal Reserve will start lowering rates, and we'll probably see rates fall faster than what they're suggesting right there, and that will definitely pick up demand into a low inventory environment. That's the key. So you see where mortgage rates have been historically, where they're projected to go. We're projected to start coming down. This will spur demand, which is why I'm saying right now is the time to buy. Right now is the time to buy higher inventory, low demand. And so this is a projection when the Federal Reserve will cut interest rates. And it's important to note that the Federal Reserve, they don't control fixed rate mortgages. They control home equity lines of credits. In other words, when they cut rates, it's tied to home equity lines of credits, credit cards, auto loans, RV and boat loans, and commercial and business financing. Fixed rates are bonds, and adjustable rate mortgages, but fixed rate mortgages are bonds. But the bond market has always followed the Federal Reserve. So that's why people watch it even on the mortgage side, because when they start to cut, we know that rates will fall. And you can see this is what they're forecasting. This is all the different opinions right now of when they start cutting. And it's September, December, and some people are even saying 2025. But it's definitely going to trend that way. So when it comes to the next 5 years, optimistic, some highs and lows, but a healthy market. Prices will continue to rise, but more slowly. Buyers might enjoy more options as inventory expands. But it's also profoundly local. How will the election affect real estate? So this is sort of a big one. I want to go over this because some people are waiting for the election, and they have all these different opinions of who's going to win, or if this person wins, what happens, or if the other guy wins, what happens. So I'm going to go over what's happened historically with you real quick to give you a better perspective. So presidential election years affect national housing market through interrelated channels: uncertainty, policy expectations, and consumer confidence. So those are the 3 areas they affect. So recent election, we had a global financial crisis in 2008, financial cliff, major healthcare expansion, and Supreme Court and European debt crisis in 2012. So different, like there's always these different events, right? Like right now we have high inflation and war going on into this election. Okay. Home sales are usually unchanged compared to a non-election year, with the exception being November. November is slower than normal. That's the key takeaway. So what that means is that if you're thinking about buying away in the election, if anything, it's sort of normal. And in November, it gets slow. Slow is when you get to negotiate with the sellers. There's people out there. Remember, we have a 4 million baseline sellers out there that or buy home transactions, and the seller portion of that, those are people that have an acute need or a need acute enough to sell now, and that's when you get the deal. So November actually would be a good time to buy a house. And a seasonal drop in sales sharper in presidential years, and you can see it's actually in October and November, right? So you can see normal seasonal drop in October and November is 10%. Election year goes down 15%. So just a little bit up. So home sales went up after 9 of the last presidential elections. So right after they went up. So that's the other thing. So it slows down and then picks back up. So an election year doesn't alter the price trend that is already happening in the marketplace. You can see existing home prices went up also the last 7 of 8 presidential elections, except for in 2009, and that was the housing crisis right there. Okay? And new home prices also went up, also except for 2009. Housing crisis started in 2008 and unfolded in 2009. And you can see right there. So in December, following election and the following year, the sales that were lost during November recovered. It isn't that consumers say, I'm nervous and never want to buy. They say, I'm nervous, let's wait to see how things play out. But once the election's done, it's played out, and they move forward. Mortgage rates decreased leading up to 8 of the last 11 presidential elections. So that's interesting. And we're sort of in that trend now a little bit. They've gone down a little bit. The averages are still in the high 6s. And then moving on. So for most Americans, election results have little direct effort on their income and therefore should not have a significant impact on their decision to buy or sell a home. So I'm going to leave it off right there because it gets into mindset stuff. You guys really are not part of the forecast. So here's the bottom line. Bottom line is that pricings are stable, inventory is rising, rates are trending lower, election's not going to have an impact. November could be a great time to buy. But we also know that as the Fed rapidly cuts, if they do 4 or 5 rate cuts next year, there's going to be a point where you're going to see very rapidly a 30-year fix drop into the low 5s or high 4s. And when that happens, it's the old expression, Katie bar the door. And 85% of you that are sitting on the sideline waiting to buy will come out, and that inventory will be gone. There won't be a 3-month supply. There'll be a 0-month supply, an extreme seller's market, which means no more builder price cuts, no more builder concessions, no more existing home seller price cuts, no more existing home seller concessions. And you're back to now multiple offer competition, which although we are very good at helping you with that, it's much better to buy now and get those concessions and then refinance later. So I hope you find this helpful. Share this with your family and friends. And also, I am a certified mortgage planner. I focus on quality, time, and cost, building the right plan for you to get that home and create wealth. Have them reach out to me. The best way to connect me with your family, friends, and referrals is to send me their name, cell, and email. I will reach out to them, and I will take great care of it for you. Thanks so much, and have a great day.